Hey traders, welcome back to another Trading Edge video. If you guys are brand new to the channel, this is a video I do each and every weekend where I come in, share with you some valuable lessons, and also show you the top trading opportunities that are on my radar for the week ahead. No camera today, just got off the road and I'm very tired, but I know how much you guys look forward to this video, so I do not want to disappoint. The theme of this video today, I guess, is going to be not rushing into trades and waiting for the right moment. And I'll explain what that means, really starting off here for our first pair, which is going to be the dollar yen. So the dollar yen was one that we analyzed in the live room this week, and we were looking for a bullish opportunity. Just to kind of flash back through our initial analysis, what we did was we identified a previous level of structure right here, this high level, and we said if price action breaks and closes beyond that level of structure, then we would expect a move higher. If price action were to move higher, then where are we likely to move higher to? Well, this area right here. And as we go down to a lower time frame, we'll get more specific with what that zone is. So what we've done here on the higher time frame is pretty much set up our directional bias. We know what we're looking for. We know what direction we're looking for the market to go in. And that eliminates kind of half of the confusion that goes through your brains while you're analyzing a price chart. As we go down to the 4-hour time chart, which is my lower time frame, we're going to be able to really isolate this zone right here. So instead of just an arrow or a straight line, we can say that the zone in which we anticipate price going to next is going to be this level right there. And that gives us kind of a bottom and a top, depending on how aggressive or conservative we are. Now, I'm going to skip to the hourly real quick and show you what we were looking at for the breakout, but then go back to the 4-hour because the 4-hour is more important for this trading idea. But for you guys that didn't see the initial analysis, on the hourly, we ended up having a nice wedge pattern right here. It's actually a flag pattern because it's a wedge pattern with a directional move before it. This would be the flag pole, and boom, we broke out to the upside. And what we've done now is we've actually created a little bit of a top. And by a top, what I mean is that we've extended up and then we started to stall out a little bit. Well, how do I know that we're stalling out? This is where the ability to properly read an individual candlestick comes into play. After we have two high momentum moves in our breakout, they're high momentum moves because they are big candles, right? They're strong candles as well, meaning that the close is very, very top to the extreme, which is the high. After that, you can see we get a series of candles that aren't too convincing. We get a neutral candle right here. It's called a doji, so it has a wick to the upside and the downside, and the body's in the middle. We get a lower low, lower close candle right after that with a long wick to the upside, which again is selling pressure, right? We get another one after that, which again, more selling pressure, and you can kind of see the theme that's going on here. If we go down to the hourly chart, you'll see it very similar as well, where we essentially have a triple top, meaning that price action came up here, we tried to retrace, we came up again, we tried to retrace, we came up again, and now we retraced and even violated this level down here. So these are all signs of a stalling market. Now, does that mean that the bullish move is over? Not necessarily. The honest truth is we never know what the market is going to do because the market can do whatever the hell it wants to do whenever it wants to do it, right? But this does mean that the market may be taking a breather, and something like our RSI, our relative strength index, can help us with that as well. As you see that we are in an overbought condition. We were in a very highly overbought condition all the way up at 85.3s. So a mistake that many traders make is they see a situation like this. They see the big green candles. They see everyone bragging about, oh my gosh, I caught the pennant breakout to the upside and I made so much money, that they want to get involved here. And what they do is they get involved at the highs, right at the point that the market has kind of finalized its move and before it starts to take a breath. And then as the market takes a breath, guess what? They're long, market's going short. Everyone panics. If you guys saw the Trading Coach podcast episode I did on Friday called The Greatest Crime in Trading, how to stop self-sabotage, 5 proven tips, which is a really great video, by the way. Lots of very, very, very positive comments on that saying, Akil, I am going through this right now. This was perfect timing for the video, which is awesome. Always good when I get a topic you guys like, and even better when the timing is right. This is exactly a similar situation, right? This is a similar situation to what we're talking about with that trader in that situation where the trader is doing the right things, and then all of a sudden they kind of get sucked into self-sabotage and they do things to blow their results. And then when they blow their results, they do even more things to blow their results, and the cycle of suck continues. So instead of entering at the tops and getting ripped to shreds by the market, understand that markets breathe, right? They take deep breaths in and they push deep breaths out, meaning that they ebb and flow, right? Trends go up, trends go down, trends go up, trends go down. So this is nothing more than a natural retracement. And instead of trying to hop on late to the trend, we should wait, try to predict where that natural retracement is going to end at, and then try to hop on the next extension further. Because again, our prediction tells us that there is still room to the upside. So now the question is, Akil, where is the next extension, or where is that retracement likely to come to? Well, there's a few things that we can do. One, remember that level of structure that I said was so important in the beginning, this level of resistance that was broken that allowed us to make the prediction that price was likely to go higher? Well, once resistance is broken and violated, it often comes back to life, it raises from the dead, and becomes a previous or a potential level of future support. So one is we have this line right here. Also, we have that breakout pattern that we had. We won't go down to the hourly, but that pennant pattern, and you can see that's going to give us a line right here. So if I had to predict a projection point on where price is likely to continue next, what I will do is I'll combine these two levels. I will say my first strike would be right here. The first area of interest would be right here at the highs of about 149.14. And the retracement would be valid until or unless we break 148.50s. If we break 148.50s, then it's over, right? We no longer look for long. So this is the initial kill zone, or some may say a kill zone, that we are looking for price to go to. So whether you're watching this on the hourly or the 4-hour, it doesn't really matter. Wait for price action to come into this level. Then, right, remember, predictive in our analysis, reactive in our execution. Then wait for your specific reasons for entry, right? They can be indicators doing a certain thing. They can be price action giving you a certain setup. This is going to be unique to you and your trading style, right? There's no wrong or right answer, but it's what do you need to be your trigger to take the trade. Whatever it is, wait for that to occur down here, and then look to catch potentially the next move up. So keep an eye on pullback trades on dollar yen. Let's go on to the next pair. Next up is going to be the New Zealand dollar. And this is an interesting situation. So my overall bias is bearish. Recently, we have broken and closed below a previous level of structure support. And there's really not another level that we can come to until we get all the way down here. So I'd say at a minimum, let's call it 56.5. So bigger picture, I do expect a move lower. But remember what we talked about, markets ebbs and flows. We don't want to be late to the move. There is a potential to catch a bullish move on this pair as well. And this brings up a good point on analysis because there are some traders that are counter trend. There are some traders that are trend continuation, and they always fight over what the market is doing, what side of the market they can be on. Understand that you can do both. You can be a counter trend trader within a trend continuation opportunity, or within a trend continuation type of deal. And I'm going to try my best to explain what that means as simple as possible. So pretty much as we go through our IPDE process, we identify that price has broken and closed below a previous level of structure. That allows us to make the prediction that price is likely to go lower. Now, there's three parts to the prediction process. There is which direction is price likely to go in. That's going to be lower. If price action goes in that direction, lower, then where are we likely to go lower to? We've already drawn out our box. I didn't do it in details because that doesn't matter right now. And then the third part of the prediction question is, if we're likely to go lower to that level, then how are we likely to go there? And just as we mentioned in the previous example, well, the market ebbs and flows, right? We extend, we take a breath, and then we extend. A counter trend or a trend continuation trader is looking for this breath to be taken and then looking to trade this next extension down. This would be a trend continuation trader. Sorry, again, Been on the road since 7 o'clock this morning, so my words are being weird, and I'm hungry, and I haven't had my coffee, and I'm just angry, right? So a trend continuation trader is looking to catch the end of this breath and trade it down. A counter trend trader, well, right? You're looking to catch this move right here. You're looking to catch the pullback, right? So to make it simple, counter trend traders are typically looking to catch the pullback or the retracement. Trend continuation traders are looking to catch the extension. Now, you're saying, well, Keel, what you value in the market is structure. You say structure is the spinal cord. It's the backbone of your trading. You don't do anything without structure. I wish I had the camera on because I'm making that snooby face, right? Well, let's go down to a lower time frame, and we're once again going to look at the very teeny tiny clues that candlesticks leave us. You can see we had this extension and this violation of our previous structure low right here, right? I think that's it. There we go, right there. And the market has extended lower. It looks like we put in the AB equals CD pattern. Maybe I should actually confirm that by drawing it out. Let's do that. Wrong line here. I'm going to struggle through this video. Perfect time to inspire me by hitting that like button and let me know that I'm doing a good job, even though I'm sleep deprived. Anyway, we have an AB equals CD pattern that completes right there. My guess is we're going to have a 1618 Fibonacci extension that completes right there as 2, because I have these magical fib eyes. Look at that. I'm so good. I told you. This is unrehearsed, guys. Unrehearsed, right? I spent too much time in the market, and although you guys are probably impressed by that, it's probably pathetic in a way that I can do that. Anyway, we're at a level where we would expect a reversal, right? If you are a CTS trader, combined technical score trader, and there's videos on this channel that you can look at if you want to understand what that is, I'll link them below. But we have, right? We have AB equals CD, so we get some points from that. We have Fibonacci extension, we get some points from that as well. We have the RSI, our relative strength index, once again being oversold, so we get some points from that as well. We have divergence from this move, if I can get arrows working or things working correctly, this move right here. We have slight divergence as well here. We've got a pretty decent CTS score, but the one thing that I don't have is structure. But here's what we do have happening down here as well. Let me know what you see when you look at these candles, right? Think about the last video or the last chart we looked at, right? What is the story that they are telling us? Well, we have two high momentum bearish candles, strong bearish candles, and then we have a bearish candle here, but is it a strong one? That wick's kind of long. The close is kind of in the upper third. It's probably more of a bullish sign, even though it's red. Well, okay, what happens next, Akil? Well, we have a doji candle. Well, a doji candle, and this is even an upper third doji candle. This is another indecision sign here. So we have the bears kind of not really winning this battle, and then they tried but didn't really win on this battle. And again, that story goes on and on and on. None of these are very positive candles at all for the bears. This is pretty much price action coming to an exhaustion point and kind of just going sideways. So if we can get a higher high, higher close, you can look for that either here or go down to an hourly time frame, whatever is your preference. And if we're going to do an hourly, look for it to happen kind of above this level right here. If we can get a higher high, higher close above this level right here, right, this is pretty much the break of a consolidation period. So I would expect a move up. Now, again, remember, this is not a this is not a trend continuation trade. Sorry, brain's a mess. So we're not looking for this big old extension all the way to the moon. We're only looking for the extension to where we think the pullback in the trend continuation setup would come to, which is going to be this previous level of structure right here. The area between our low, zoop, and our high, jump, right in there. So this trade would offer opportunity for a break and close above. If you're a breakout trader, trade it right away. If you're a pullback trader, wait for the pullback and then try to get out in this area. And then if you're a counter trend trader, you just, count your money, laugh, and exist until the next trade. If you're a trend continuation trader, maybe you exit the counter trend trade. If you get a reason for entry, boom, you're right back in the trend continuation trade to the downside. I really hope that made as much sense as it did in my brain, but brain words don't always turn into mouth words. So if it didn't, just leave any questions or comments below, and I can clear it up in a weekly video this week or something like that. Pound Canada is next. I got more candlestick stories for you. So I said the theme of this video was when to stay out. Maybe candlestick stories should have been the theme, but it's too late to go back and edit it. Pretty much, we have come to a previous level of consolidation, right? You see this big old sideways chunk right here? That is consolidation, B leg of a potential pattern as well, but we'll worry about that later. We are in the middle of it, and once again, if we read the story that candlesticks gave us, this is a bullish candle, but we can see very clearly that it got slapped in the face as it approached that previous consolidative level, and then it tried to go up again and it got slapped in the face once more with this bearish pin bar. Not only a bearish pin bar, but an inside bar as well. As we go down to the lower time frame, you're going to see some more consolidative actions, and we ended the week with a lower low, lower close. So if we're going to predict a move back down to the downside, then the next question is, where is that move likely to go to? Well, my mentor once told me these 4 magical words: look left, structure leaves clues. That's 5 words. I'm embarrassed, but yeah. Anyway, those 5 magical words, maybe I'll go back and edit it out. Look left, structure leaves clues. Well, if we look back at this consolidative level, what did we do? Well, we came up and we came here, and then we came up and we came here, and we did all this junk and we came here, right? You can see that we came to this level previously twice. And if I drag that line on, right, we had a little bit of a stall right here, but then we stalled here as well. This would be the level in which I would expect price to go to if we were to continue to go lower. So once again, not predicting any type of long-term continuation move, but I would be looking, and this is going to be a good day trading opportunity as well, I would be looking for some sort of quick little retest and then a chance to trade it back down to this level right here and then get out and wait for the next opportunity. Lastly is going to be the Euro New Zealand. We're back to finally another don't be late type of lesson. Euro New Zealand was one that we spoke about in last week's Trading Edge. I actually followed it up with the breakout opportunity in a midweek video. Just go see the video that says Euro New Zealand breakout update. Again, I'll link it in the description box below. I'll put it in the comments if it's easier for you to find that way. But this is another one that did exactly what we thought it would do. I don't know if my analysis is still on here, a little bit of it, but here was the initial kind of high and tight flag, and then here was the breakout, here was the ascending triangle, and then boom, we rallied up to the moon. Now, bigger picture, if we go back, I need to remember where we were looking for. Give me a second. It's going to be on the weekly because it was a very long time ago, like 2010 or something like that. On the weekly, we are looking for, and I'll just do the high point of it. We're looking for price action to come to at the highest point this level, right? This 21.18 level, whatever like that, or 211.84 level. So there is still a lot of room to go to the upside. And again, something that gets traders in trouble is saying, well, Keel, man, look at that. There is, here we go, a lot of room to the upside. I'm late, I'm going to miss it, I need to enter now. And I'm here to tell you, you don't need to enter now, right? Because there are 2 clues that are telling you you should not necessarily enter now. One is the RSI, right? The Relative Strength Index. Now, we've mentioned this a few times. I probably should explain what it is. This is a momentum indicator. This is a volatility indicator. This is something where if the market is moving very bullishly, it should be going up to where it's at right now. If it is moving very bearishly, it should be going down. But here's the thing. Markets need to breathe, right? Nothing can go up forever. At some point, it's going to reach an exhaustion point, and that's what our overbought and oversold categories are meant to tell us. My overbought category here, specifically on the RSI, is a little bit higher than the default. The default is 70. I have mine at 80, so I want to look for those very, very, very overbought categories or situations. And when the market gets in those situations, that is a sign that, hey, we may be putting in a little bit of a retracement. Maybe I need to wait. So that's one sign right there, the RSI being massively overbought. It will come down forever, trust me, or at some point, trust me, it won't go up forever. Another sign is the loss of momentum. Once again, we had a high momentum candle here. We did break out to the upside on the daily, but we're moving higher, yes, but we're not doing so at a great rate. We have very small, tiny, low momentum candles. That's not a great sign. If this were a really big breakout, we would see big, high momentum candles because everyone would be buying, and that's not happening. So these are some clues that look to tell me, hey, we may be in for a little bit of relief. So instead of being the trader that tries to buy right now because you think you're late, only to see the market kind of do like this and you get shredded for your money, save your money at the top, wait for that pullback. The next area is going to be right in here. This would be the next aggressive area I'd look for. Wait for that pullback, and if the market gives you a secondary reason to get involved, then you buy it up. And you just keep doing that until we reach the level that we've anticipated. I mean, look at this thing. It is all the way up here. If I take a measuring tool and just measure from where we're at right now up to here, it is about 900 pips away. Yeah, that's a lot. So there's no need to rush. So understand that your job is simple, right? This market is going to ebb and flow, right? Ebb and flow. I highly doubt it's going to go straight up there. Your job is to take advantage of this whenever you get the clearest signal. So if you don't catch this retracement down here, just wait for the next break and then try to catch this retracement here. If you don't catch this one here, just wait for the next break and then try to catch the next retracement. And you can do that until price has reached its destination. And if price never gives you a signal, then it just wasn't meant to be. But the worst thing you could do is kind of be late to a trade because you're not going to do anything but lose money, then become upset at losing money, and then try to make up for that loss of money and then lose even more money by doing something dumb when you try to make up for it, right? Yeah, so just don't do it. But something you should do before you leave is hit that like button. That helps the channel out a lot. Subscribe if you're new. I did a lot of videos, a lot of Trading Coach podcast video editions this week that have been getting lots of traction. The Self-Sabotage one I told you about already. Another one was on backtesting, right? Questions answered, how to treat your trading like a business. Lots of great comments. Make sure you watch those and make sure you subscribe and like. That way they're put into your algorithm so you're forced to see them, and then you can choose if you want to get better or not. But I'll see you guys during the week. Until then, plan your trade, trade your plan. It is time to coffee up and watch some college football.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name, all our insecurities are on. This is